Hey everybody, good morning. Good morning, good morning. Glad to have you on the stream. Morning, Larry, Francois, Valerie, Arturo, Ben, Philip, Maurizio, Warabar. TGIF, yeah, hopefully Friday is not a dumpster fire. And hopefully we get some positive action in the markets. We've got Jackson Hole going on right now, right here, Jackson Hole. And is it going to be a monster? I don't know. We could see that, right here, monster. And if you want to chat with me while I'm live, morning Sledge, morning George, like these fine folks that are saying good morning, all you got to do, click right down here in the corner, click subscribe. A few seconds later, you will be able to chat on the live stream while I'm live. Now, if you turn it in later while I'm no longer live, you're going to have to leave a comment, and I will do my best to get back to you. But if you want to come chat with me all day, the link is in the description for those that choose to financially support me just a little bit. I give you a lot of bit of my time, and I run a Discord server for those that choose to support me and want to chat about the markets with me and say 1,900 of my friends. We have a great group of traders assembled. Some people way better than me at trading anyway. Maybe I don't know, just some great people in there. Great patriotic members of society, people that spent a lot of their life in the military, and some people spent their life trading. Some people just work like dogs. I mean, we got a little bit of everybody. So come join us if you want to. George, morning. Dan, Space Cowboy. I don't believe I've seen your name before. Maybe I have, but welcome to the stream. And let's get into it, shall we? Let's get it crack-a-lackin'. So, first off, let's share this. And Goldman asks, what if Powell surprises tomorrow? That's Goldman Sachs. It's like a 30 to 45% probability that they're throwing on this thing. So most analysts, right here, most analysts anticipate that Jackson Hole central bankers will reiterate the job is not done message, indicating a need for extended period of tightening and tighter monetary policy. This implies the intention to raise rates further in the short term. Real interest rates, blah 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 blah. Let's be serious. It takes 24 months for an interest rate rise to trickle through the economy. I mean, like trickle all the way through, like have real effect in the economy, all the way through, top to bottom. Our first one was April last year. We're not going to get to 24 months until April next year. But they're making all these decisions on what we should be doing with data that's like a month old. I mean, the market doesn't react that fast. I mean, we're talking about like a 1,000-car long train, and they're trying to turn the car around in a cul-de-sac. I mean, we're trying to turn this train around in a cul-de-sac like a car, Hey, Arthur, glad to see you this morning. And the economy just doesn't work that way. And these rates have worldwide impact, not just impact here in the United States. It affects everything. Borrowing money to buy stuff from China. It, this is just, it's wide. Just looking at CPI and PCE, and they should have been reacting way before this. And I mean, they're making speedboat decisions on very short-term limited data. So got to be careful. There you go. The SOFR futures, EU Euribor futures, and Sonia futures. We could see. I think a lot of people are expecting this pullback, this loosening, this return to zero interest rate policy. I just don't see it as likely to happen. Like I do expect them to hold to that policy, but they could say that, they could decide the job's done, possibly, but I don't think we're going to cut rates. I don't see cutting rates, and I see holding rates as likely, but I also see inflation as likely to come back around. And here's one of the problems that's really driving housing higher. It's not a problem of housing shortage. It's the concentration of ownership by the wealthy. Now, if you are invested in any kind of housing as an investor, you're part of the problem. If you're supporting Airbnb, if you're supporting any of these investments where retirement accounts manage large portfolios of rentals, you're part of the problem here. So we've had the population from 2019 to 2023 rose about 4 million in the United States. We've put 5 million housing units on the market in that time. In 2019, we didn't have a housing problem, or it wasn't as prevalent. Now we're growing this housing problem, and there's 25% more houses than there were people. The housing's getting soaked up by investors, especially the lower end housing, buying those cheap homes, taking them out of the market, upgrading them, flipping them, all that sort of stuff. And it's causing a problem. How do we go back? I don't know. But that's really what's driving the housing costs, and it's not turning around. So, I don't see this as likely to turn back around here. So here's your median household income. There's the median rent price. That's inflation. We got a little bump on household income. We got a lot of bump on median rental prices. All right, this is just essentially, this whole article is just sharing charts and data that says the top 10%, those of us with investment cash, are just fleecing the bottom 90% that has to do rentals. So there you go. And investor purchases of investment properties taking a huge hit here. So we had a huge spike. That was all that extra cash in the markets. People bought houses like crazy. And now we're seeing this return maybe back to a level. I mean, unless we go into a negative, that housing is not freeing up. We're seeing a lot of housing tied up in Airbnb. I mean, like just on my parents' street, there's like 3 to 5 houses that have been, this is the street I grew up on. It's not really a like neighborhood street. It's like tractor trailers go down that street cutting through. But just on that street, there's 3 to 5 houses that have been bought up and converted to Airbnbs. They sit empty most of the time, and people rent them because their house is like 2 miles from campus. It's down a freaking crazy road, but it's very close to campus, and that's what you got. So it's very popular during UT football games. Go Vols. But other times of the year, the rentals come and go. But those 3 to 5 houses are tied up in this investor stuff, so out of the market. So when does this come to head? I don't know. Probably during the next Greater Depression, which could be coming up. Speaking of that, though, the markets, look at ES right here. Beautiful measured bounce potential. If we break above 40, this is very simple at this point. Very simple. We break above 45.25, right back up here, 45.25. We break above that, it's game on. And we're talking about game on to high 4600s. All right, this is a very powerful setup in the market right now. This is ES. This is the S&P 500 futures. This came down here, got a little wicked into the close, but held, and potentially pushing higher. We get above 45.25. it's game on, and we could be on a path for new highs, new all-time highs before the end of the years, before the end of this year. Tongue tying myself. So be careful out there, all right? Be careful, be careful. Yeah, be careful. Oh, that's cool. Click the one button and I don't show up. So watch for this thing to break higher. All right, a lot of bearishness out there. Now, alternating involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap here. I may be completely wrong. This presentation is intended to be informational, educational, and fun. Hope you have fun. Otherwise, what's the point in life, right? It's not a recommendation to buy or sell anything, financial instrument or otherwise. If you desire that personal financial advice, hire, consult a financial advisor with a fiduciary duty to give you advice. Now, we haven't really talked about the calendar all week because it was a pretty benign week calendar-wise. We have the Jackson Hole Symposium wrapping up tomorrow. Already kind of been, on the monologue about Jackson Hole and the housing. So I think interest rates kind of going to hold here, but those idiots could raise rates. I mean, I don't know. We're going to deal with the fallout for a number of years of this fastest rate raise in history. Now, next week, we have pretty benign Monday coming up. UK on a holiday. We've got some JOLTS jobs and CB consumer confidence here. On Wednesday, we've got non-farm employment change, preliminary GDP. That can be a market mover, especially if we surprise and had negative GDP, which I don't think we will, but it could. And come on down to Thursday. We've got some core PCE. That's Powell's favorite number. Unemployment claims right there. Then on Friday, we have our average hourly earnings, non-farm payrolls, and employment rate for the monthly, plus ISM manufacturing PMI. Again. So few news items next week. Could be a market mover as we move into freaking September already. What the heck? Getting into the fall time. Labor Day coming up. After that, the week, this will be Labor Day weekend next weekend. Not this weekend, next weekend. U.S. Labor Day, for those of you not here. And we'll have a holiday on Monday. So that next Monday, not that Monday the 4th, not Monday the 28th. September 4th, right there. All right, so that's kind of coming up in the future. Future. So let's talk about something, DGS2 right here, the interest rate. I think we're going to kind of chop sideways, potentially well into next year. And then we may see DGS2, which is the constant maturity rate, start exceeding the Fed rate. If we see the constant maturity rate cross back over the Fed rate, inflation's coming back, and we're probably going higher. Right now, they're kind of flying in parallel. The Fed's target rate right up here in this box. And if DGS2 gets sparky, crosses back above that, we're going to see a lot more rate raises. All right. We went through the fastest rate raise in history, but, DGS2 was also rising at the fastest rate in history. You could say maybe, the market was convinced that the Fed was going, the Fed just talking about it was the reason that rates were raising. And the Fed just kind of, but the Fed chased it all the way up until we got up here. Now they're above it. Are they dragging the rates higher? Not so sure. I think they're a little high on their rate. They should wait for DGS2 to be above them. Because every time in the past that the Fed has gotten above DGS2 has led to a financial crisis. At least in my trading history past. So I'm on red alert watching this. If we have a financial crisis developing, I'm going to let you know. Now, let's zoom back out. Let's look at the year. NVIDIA, was crazy yesterday. Popping huge and then retracing virtually the whole thing. We're up 217% year to date on NVIDIA. How much more do you think it can go? And the price to sales Of course, you've heard me talk about this. It's wicked high. And there's the market bell. You know, Microsoft, 30%. Google, 40%. Meta, 133%. Tesla over here, 94%. You know, things have been popping. Adobe, 50% down here. Salesforce, 52%. There's been tons of opportunity to make tons of money on this stuff. You know, AMD even up 54%. Stay with the stuff that's working. Don't chase the stuff that's like down here. All right? This stuff is all underperforming this year. This is down for the year. And it's year to date. Stock performance. These are the ones that are laggards. Could they turn around? Sure, they could. Would I bet on them? No. These are not the ones that are going up. I mean, especially like Pfizer, down 30% this year. NEE over here. Utilities. I mean, look, a lot of utilities getting hit. You know, CVS getting hit. Dollar General, we were talking about yesterday. Target. You know, all the major cell phone companies. T-Mobile, Verizon, AT&T. Lots of banks in here. Banks have had problems this year. Banks are going to continue to have problems. Rates are raising. Rates are a problem for banks. Now, let's talk about what's actually moving today and see where we can throw our bias. We got the retrace. Went a little deeper than I hoped for, but we are holding, so far, holding a measured bounce. We get back above, you know, that 44.25 area where I had the line yesterday. You see how we came up, bounced it, pushed down lower. We break it back above that. It's game on. We didn't do this. We didn't hold support and bounce, so we flushed on down. I'm watching. We can stay bearish and we can go lower low as long as we are under that 44.25 area on the futures. Oh, there's a NVIDIA crossing 465. Talk about that in a minute. NASDAQ futures also indicating we could go higher. Be careful. There's a move higher brewing in here. Does it happen? Now, Russell, a little bit more bearish here and probably going to fill the gap down before I even get off this presentation. So potential for Russell to fill that back down to the close yesterday. If you're in opening bell alerts, there you go. There's a potential. That's much more bearish than the other charts. I mean, look at that the last few days compared to that and that. This one is a gnarly sideways, holding the roadmap line and turning lower. Be careful out there. Oil may have done the bounce that I was looking for. This may be the one I was looking for. I will be watching this. I will add, if I add a position, I will let you know, but that was it. This is breaking higher. It might be, this is an aggressive type entry. More conservative will be up here around 82.25. Plan the move for at least 87, maybe 89, and possibly the 94 target that I've been talking about for a couple weeks now, where these two double top things happened back here in October of last year. Gold, just farting around, not really taking off, not really moving so far, just uninteresting. Bitcoin still consolidating under the roadmap line. As long as we're above this low, bias long, but cautious. There will be a crypto unleashed trade coming out later today. Ethereum, same kind of situation. Ethereum and Bitcoin have come back and brought themselves back into alignment. Dollar still having, still pushing up, rejecting off of the box. Initially, can we get above the box? We'll see. If we do, we're probably running on up here. NVIDIA, throwing out alerts. Be careful. This one may go on the deep retrace. This was pushing all the extensions of any targets that I had. And we can come down pretty severely at this point. Please, please, please be careful. I mean, look at this move. The 618 retrace of this whole move up is all the way down here at 262. If we just did a 50% retrace, 309. If we just came back to the roadmap line, we're talking about 350. And currently, we're at 465-ish. Be careful out there. I am still long my MVDS short shares. SMCI looks like it's going down to the roadmap line. Be careful if you're along this sucker. Be careful. Know when you're wrong. It's not being wrong this costs you money. It's staying wrong. Don't chase this thing. Don't be long in this thing all the way down into this retrace. Have your level. Know when you're wrong. Cut it. Get back in after we bounce. All right. W Day. Just churning. Like, there wasn't a lot of stuff moving pre-market. Let's be, to be completely honest with you. Ulta was up. Now it's down. Just chopping around. That's a bearish pattern at this point. Be freaking careful. That's lower high. That can push lower. Be careful, be careful, be careful, be careful, be careful, be careful. VFS. Oh, look at that. Right up into those target prices. Yeah, it could go 73, could go 83. If this thing gets into the hundreds, that's an opportunity to short the fudge out of this muffin. Be careful on that one. This can turn on a dime and drop like a crazy drop. They're not the next Nvidia, I don't think. Netflix. Just chopping at the bottom of the box. Kind of holding the bottom of the box. Probably going to pop up and do the gap fill at some point. May need to touch the roadmap line first. This is kind of the first indication. A lower high. If we get back below the box, probably coming down here to the roadmap line around 380. And could be an opportunity to get long for the gap fill. Of course, Netflix having a little trouble, but that doesn't mean anything for the stock chart. All right, patterns are patterns. HIBB. Just chopping in here. That's a nice pop, making the list, but that's a bearish move until we're back above 50. Hasbro. Potentially going to be bullish here. This is a potential breakout. Nice. Could go up and, could go up and retest this area up here. Getting their act together a little bit. Nice to see. DPST, that's bearish, and I wouldn't mess with that right now. FNGU, potential to bounce off this roadmap line. It's definitely volatile, getting a little volatility here. And that was a wicked retrace. Watch, resistance is right up here at 197. Support, if we go on a third leg down here around 118, possibly 105. I'd watch the underlying NASDAQ charts for what's happening, what's crapping. Beautiful, almost market roadmap line bounce right there on SPXL. We break back above 89. That's an aggressive entry. We break back above 93. Probably heading out to 103, 109. FAS. Nothing. Nothing right there. This thing has a big long-term potential, but just gnarly at the moment. DOMO. Oh, ouch. That's why I say be careful on these things. Bearish and big gap down. That thing can, losing money, can go out of business. PNAC. Oh, look at that one. Another dumpster fire right there. That's a real dumpster fire. Look at that. Whew. That's a prime number acquisition. Prime number is going to get you in the garbage right there. HKit. Popping down. This thing will probably retrace at some point. Come all the way back down in here around 10. HE. Oh, golly. Dumpster fire after dumpster fire. Hawaiian Electric, I feel sorry for the people of Maui and all the stuff. Hawaiian Electric not looking, that's no bueno. I mean, eventually they're going to get a bailout or something, or bought out or something. But this thing can go to zero. Like, they were already not hitting on all cylinders. Utilities were already a down sector, and oh dang, man, Nvidia keeps on dropping. Marvel, the other Marvel, back to the roadmap line. That's beautiful. Holds there. Almost sneezed, caught it. I don't have a mute button, so I'm glad I didn't blow everybody out. And we got to get back above that high, that right there. Possibly above this. Probably resistance there. Got to be above that to get to 72, 77. Potential bullish move, but there's also the gap fill. It may go back down to 49 before it can do that. DOCN. That's looking pretty wicked. Pretty wicked. No idea what they do, but that looks like it's going to go lower low. HTHT is sideways choppy. Nothing. It's kind of a bust today. I don't know. There's not a lot to look at. I think that was a copy of the earlier alert, probably. Nvidia, be careful if you're chasing this big dog. Can it go back up? Sure, it can go back up. But be careful. Eventually, the party's going to be over. Eventually, the lights are coming on at the bar. Is Nvidia the prettiest girl there? Or is it the one you're like, whoa? I'm not sure. Be careful out there, all right? My bias for the day. Where am I getting that heat map? The heat map's right on TradingView. The products right here. You can pull it up right off of the stock heat map. I have screeners and stock heat maps right here. Stock heat maps under screeners. So you can set it to year to date. You can set it to all these things. You can set it to custom. You can set it to, you can make them all equal size. You can, bring this sector group, no group. There you go. Alrighty. I'm going to chase it all the way down. Good luck with that. And you can zoom it up too. So that's cool. It's a neat, handy dandy thing. FinViz does the same thing. Thinkorswim, if you have that platform, does the same thing. Different ways to customize different things. So I also keep a crypto heat map going too. So, all right, there you go. Bias for the day. Circle back, talk about it. Looking for that bounce, but we got to get above 44.25 on the futures. What is that for the index? Let's run it really quick. The index and the futures running a little different pattern, but it's still bearish. I mean, it's still bullish. Excuse me. Still a bullish potential setup. Let's zoom it on down here. Too cool. Too much sauce, son. Let's talk about this. Let's clear some of the stuff off. Right here. Went a little deep. Not too deep. I mean, we could have come down here. A little deep for the 618 measured bounce. We need to clear 44.10. Maybe 44.15. That 44.10 to 15 area. Set some alerts in there. We start breaking above that on the S&P, on the SPX, the actual cash index. It's probably game on. Game on for moving higher. And then we got to clear that 30-minute roadmap line. All the things we got to do. All right. I will be on Ask the Pros today. And I will be doing talking about crypto at 1 p.m. too after Ask the Pros. So I'm got lots of live things today. Be careful out there, and I'll see you later. Have a great day. Have a great weekend. Make sure you hit the bell with the doodads so you know when I go live on Monday and talk about what's moving. We can see how the market's reacting to Jackson Hole. Bye for now. Have a great day, everybody. See ya. The end of the dumpster fire. Love it. End with the dumpster.